Welcome back, everybody. In today's video, I'll be discussing Tesla's Q3 earnings report, the market, and that earnings call. Oh my god, that was the worst earnings call I have ever heard. Just terrible. Words cannot describe it. Let's get to it. Yeah, the market is not liking this. Phew. Before I get to the earnings and frankly horrible call, I want to add my 2 cents on a topic that has exploded on the internet after the call. The topic of affordability and interest rates. Gary Black made this inane comment. Just look at this. He compares a car a year ago at 5.16% interest rates at $65,000, 10% down, to 7.51% interest rates at $50,000. First, let's talk about interest rates. 5.16% itself is a high interest rate from recent memory. 4.2% would have been a much better number, although I got my car for 0%. When the economy was normal, the payment on a 4.2 interest rate on a loan in 2021 $1,082, which is still expensive. The average middle-income American making $75,000 cannot afford a car payment of $1,000, Gary. They just can't. High interest rates and high inflation are not just affecting cars. Mortgages are 7.5% right now. People cannot afford to live anymore. Food prices are up, transportation prices are up, everything is more expensive. Somebody making $75,000 a year cannot afford to spend $2,000 on a mortgage or rent, plus $1,000 a month on a car. They just can't. That is the point. Now the car market is crumbling. The GM Bolt has been canceled. GM delays production of 2 EV pickups, delays the Orion assembly plant by 1 year to focus on costs. GM BEV sales last quarter were 20,000 units, which is less than in the first quarter of 20,670 units. BEV sales are declining. Ford's F-150 Lightning, the EV version of their best-selling vehicle. The ICE version sells, 1 million units a year. Ford cuts production due to tanking sales. My cat says, don't forget to like and subscribe. Ford Lightning sales are down 45% compared to last year to a pitiful 3,503 units. Pause here if you want to bask in the glory of the Lightning's glory. How about Lucid? Moving on. Financially, they are doing even worse. Ford lost $2.1 billion in their EV division in 2022. Okay, rant over. The point remains that high interest rates and high closing costs are crushing the EV market. Tesla is the only healthy US EV maker. Elon is correct here. Earnings time. After this, I'll get into the infamous call. Oh boy, is that a doozy. Most things this quarter aren't a surprise since we 1. Knew about the price declines, 2. Knew about the production and delivery numbers already, and 3. We knew about the factory downtime. So, of course, operating margins declined to 7.6%. The $3 billion increase in cash is mostly due to a loan they took out. Now, taking out a high-interest loan when you have $23 billion in cash speaks to how spooked Elon is about the economy. It's scary. I'll get to that later. Energy, it's looking good. Training compute more than doubled compared to the prior quarter, so that's nice. The 10,000 H100s are putting in the work. They said, "We continue to believe in an industry leader that needs to be a cost leader." I like that quote. That's how Tesla will put the OEMs out of business. They just can't compete on cost. Again, mostly as expected. Energy and services looking good, up 40% and 32% respectively. Free cash flow is still positive even after all the drama. During this time of investment, positive free cash flow is nice. $848 million isn't all that much, but a number above zero is okay. Nothing to shout from the rooftops, but it's fine. Tesla can afford all of their investments with operating cash flow. Here's the loan of $2.3 billion. Not much to say about the rest. Business as usual. I like the storage deployed, 90%. Of note here are the slowing ramps of the Model Y worldwide. This is new news. It's reaching, I think, max long-term sales as it appears to me. Also, did anyone else notice that the Shanghai capacity increased to 950,000 this quarter? I didn't see anybody else mention this. Cybertruck at 125,000 unit capacity currently. Cumulative FSD miles driven. This is data to train on, so the more miles, the better. Now, this is the highlight of the night. Even with factory downtime and factory ramp, cost per vehicle declined to $37,500. Notice that Lathrop is not fully ramped yet. Only phase 1, producing 16 gigawatt hours per year, far below the 40 gigawatt hours per year target when phase 2 completes. Energy is now Tesla's highest margin business, and Shanghai's megafactory isn't even online yet. No changes in outlook. Is it me, or is this picture pretty? Read over this if you like. Now it is time for the call. I'll start with the good, then the bad. The good. On the call, Elon mentioned that Tesla has 3 main priorities. Number 1 is cost reduction. Number 2 is investments in AI and other growth projects. Number 3 is continued free cash flow generation. Training is the limiting factor for FSD. Significant progress has been made with FSD 12. The energy business is becoming the highest margin business. Positive Dynamics is singing, "If I only had a brain." Sorry for my singing voice. Over 1 million Cybertruck reservations. The 4680 cell production in Texas increased 40% quarter over quarter, which is nice. It needs more work to achieve steady state goals. The 4680 factory in Texas is ramping 4 lines in phase 1 over the next 3 quarters. One of those 3 is for the Cybertruck. Phase 2 is under construction. Phase 2 has an additional 4 lines, so it'll be a total of 8 lines in this factory, and phase 2 will start production in late 2024. Now for the bad, and this does get bad. Now the Cybertruck maximum production long term is expected to be 250,000 units per year, and they think it will reach in 2025. And that's far lower than I was initially expecting. I was hoping for, closer to 1 million units, maybe 750,000. 250 is just not that significant. The Cybertruck will have enormous challenges reaching volume production and making it cash flow positive at a price people can afford. Elon said this is normal for a product with a lot of new technology. The Cybertruck is unlike anything ever made. It's like starting from scratch. The Cybertruck is difficult because there's no existing design for them to copy. And he was tempering Cybertruck expectations. Elon also mentioned a year to 18 months until it is a significant positive cash flow contributor. A literal quote, "We dug our own grave with Cybertruck." Elon mentioned that they can't continue on a 50% CAGR forever. So he's tempering expectations on future revenue growth, unfortunately. A little bit earlier than we had hoped. But it was inevitable eventually. The Model 2 is a much more conventional item in terms of technology put into it. It should ramp faster than the Cybertruck, and it has significantly less parts. It has a revolutionary manufacturing approach. Unheard of units per minute level is what they're aiming for. Elon is extremely worried about car prices, interest rates, and the global economy. Elon said that the Mexico Gigafactory's construction is being delayed. Construction will be sped up if interest rates decline. This, to me, is concerning. He also mentions that GM and Ford went bankrupt in 2008 and that he has PTSD from 2009 when Tesla itself almost went under. I don't know about you, but I get a little worried when the CEO mentions the B word on an earnings call. He says Tesla will be safe and will survive through this, but still, he is envisioning an economic outlook that is devastating. But I think this explains the loan that Tesla took out. He also views pricing in terms of monthly cost for the customer, including financing with the high interest rates. So when the interest rates go up, the car prices go down. Elon got really emotional on the call. It sounded like he nearly cried when discussing the work from home and when he had to sleep in the factory. Yeah, he almost went full Greta. You never go full Greta. I'm a little worried about Elon. Overall, the earnings report was good. We knew most of the things coming in. The train keeps moving forward. However, there are some concerns about the Mexico factory, interest rates, and the economy in general. Thank you for watching. Don't forget to like and subscribe, and I'll see you in the next one.